Just received a bounce back loan and wondering what you can do with it? In this video, I'm going to tell you. So many owners are now in receipt of bounce back loan money. At the time we're recording this video, the money is getting there slowly. A lot of banks are really up in their game and getting it done. However, there are some delays for some people, particularly if you didn't have a business bank account to begin with. So that's all been worked out. But in this video, I just want to talk to you about what you can do when you actually get the money. It's probably unusual if you're picking this video to watch that you haven't heard of bounce back loans, but if you haven't, be sure to check out the other video we did recently where I'll tell you all about it there. Now, the British Business Bank, the bank behind this scheme, have put out some frequently asked questions around the subject I'm talking to you about now, which is what can you do with the money? And the answer is, to a degree, whatever you like. But specifically, we're going to talk about a few points. Now, the general rule is that it must provide economic benefits to the business. All that means is that you're going to provide cash that can go on and do its everyday work. And i.e., you're not just going to rob it straight from the company and do something personal with it. However, for reasons we're going to talk about, that could occur. But your intent is that you're not borrowing it for personal reasons. You're borrowing it for business reasons, genuine business reasons. And mainly, the main thing you're going to use it for is what they call working capital. That's the word that's used a lot, which just means cash in the business. Now, a lot of people and a lot of business owners we're seeing at the moment are borrowing it because they're really unsure about the time ahead. So they're keeping it, they're sitting on it, and they're just going to keep it as a reserve and use it to pay costs, their team, rent, other sort of overheads as they're known, these regular costs, and that they're just going to have it as a safety net. And that's fine. That's really one of the main intentions of the scheme. We've also seen some clients catching up on old tax bills. So because they haven't had cash flow to do it, this has provided some cash flow. So they're catching up with some other liabilities like old tax bills or other suppliers they might have owed or something like that. So for a lot of businesses, it's actually been a very timely loan, full stop, regardless of the fact that we're in the middle of the coronavirus. So that's been a really good bonus. So you can use it for that reason. And you can use it for refinancing. So one of the things that spoke about a lot, and they've said you can do what you like with this, is if you imagine the loan is very, very cheap, and I've talked about this on previous videos and on posts on different social media, but the fact that the money is so cheap, you'll never see money like this again probably. It's 2.5% on the loan. You're paying nothing back in the first 12 months. If you have something like a van, let's say you're in the trade and you've got a van, and that might be costing you, I don't know, 300-400 quid a month for this loan. It's probably 7-8% interest on it. You can pay that off with the money you've got now potentially. Check, of course, to make sure there's no stupid repayment charges. So you can pay that off early, then pay nothing for 12 months, which is boosting your cash flow, and then you're going to pay a relatively cheap amount after that. So it is really successful at doing that. So at the minute, if you've got any other borrowing, overdrafts and the like, definitely do the numbers and consider paying that down and using this loan in that way. And for me, it's very much in the spirit of what the loan's there to do. It's going to give you a short-term cash flow boost, which is the most important thing, and then it's going to keep your business steady because that eventual repayment is quite low compared to whatever you're paying at the moment, of course. Now, the really interesting one that I've seen a lot of talk about online is people wondering, can I borrow, say, 50 grand, which is the max you could borrow if your turnover's high enough, and then take it straight out as dividends? So if you're a limited company, this particular point applies. I've seen people say, no, you can't. The answer is yes, you can. You certainly can do it. However, and this is a massive however, I can't stress this enough, you need to check with your accountant. Nearly all limited companies will have an accountant because it's nigh on impossible to submit the accounts required without one. But you need to check in with them and check that you're in a position to do it. Because if your business just about works, you're just about making your tax bills, you're just about doing this, there's a good chance that you sticking 50 grand in the account now and taking it out is going to cause you a tax problem. It's going to cause a loan account to you as a directive. So if you imagine you're going to put 50 grand in from the bank and then you're going to borrow it straight out, and the company won't have enough profits to earmark that for you as a dividend, as it's known. So what will happen is in 9 months after your company's year end, if it's not repaid, you're going to get hit with a tax bill of 32.5%. And that is a very difficult position to come back from if you don't generate a lot of cash. So really the takeaway from that is make sure that you have the funds on paper. Now, where you might have the funds on paper, and I've seen this with plenty of our clients actually, if you've got, say, you've got a big, they call them accounts receivable, just imagine amounts owed. You're owed a lot of money from other sources, but it's just not in your bank at the moment. On paper, your business probably looks quite healthy, there's quite a lot of profits. If you're borrowing that money and then you're going to use it to bring out, because it's generating some cash into the business, and then you're going to pay your own salary, wages, via dividend, then that's completely fine. In the right circumstances, you'll take it out like dividend, you'll pay any tax that you would normally pay on dividend, and that's completely fine. But I wouldn't encourage you instantly to think, I'm going to bring it in and take it straight back out. I think in the majority of occasions we're seeing, that would be a bad effect on the overall company position, but it certainly could be used like that if you really needed it to, and that made sense. And was, of course, legal to do it. Because directors can borrow money from the company. That is okay as well. If you're absolutely desperate, you could definitely do it. But it's not A, the best use of the money, and B, like any loan to a director, there are pretty serious tax consequences to doing that. So really do speak to your accountant. Or if you haven't got one, you can always give me a shout. Well, that's it. That's the main things you can do with it. I think they're the ones we're seeing the most. Of course, your options are pretty endless. We're seeing lots of different things being done, but they're the main themes we're seeing at the moment. If you like this video, make sure to click the subscribe button below for more like it to get notified whenever we release a video. Now, if you're in the middle of coronavirus and watching this, then of course, there's so much news happening at the moment that I would encourage you to check out healandassociates.co.uk/COVID-19 for all of the latest support from the government and news as it happens. If you found this video valuable and you think that some of the people in your network or your friends would benefit as well, please do share it with them. That's it. Until the next one, we'll see you there.